All right. Thank you very much, everyone. This is the first panel of the Asia Disruptive Summit. And the title of the panel is Family Offices and Disruptive Technology. As an introduction, I would say that we know by definition family offices are usually considered conservative. Yet a recent Fidelity Investment survey revealed that 22% that over 400 institutional investors, including family offices and foundations, are actually or are exploring or have explored investment products related to digital assets. The reasons appear to be soundly financially motivated: portfolio diversification, limited correlation to traditional asset classes such as stocks and bonds. However, we also see a strong desire to engage the next generation and explore fintech, blockchain, digital assets, artificial intelligence, and other disruptive technology businesses. However, it doesn't mean that those things are easy, because even for seasoned strategists and tech specialists, there are still difficulties sometimes to assess the real potential and business cases of these projects and how to connect them to their existing businesses and their values. But one thing is certain: those conversations are now happening more and more, and everybody understands now that we are living a shift of paradigm, and adaptation is key. So I'm here today with two very seasoned professionals. Let me intro them. First, we have Baron Nicholas Verwilghen, entrepreneur in institutional asset management, fintech, alternative investment, himself from a very entrepreneurial family. Chief investment officer at 1741, a fund management company. I will let you, Nicholas, explain exactly what that means. So thank you very much for participating to this panel. The one thing that I want to mention about 1741, and that only is very interesting, I think, is the fact that 1741 is the year of origin of the later Verwilghen and Co. Is that the right way to pronounce it? And Verwilghen and Co. is actually the oldest private bank in Switzerland. That's amazing. And we also have Patrick Ng. Patrick Ng is investment principal at Soul Ventures and Soul Capital, a family-owned private entrepreneurial company focusing on investing in innovative and emerging technologies and internet companies with advanced ideas. So from early stage companies with great potential to later stage companies, helping them to get to a leading positions in their own industry. So it's fantastic to have you guys together on the same panel. Two very different backgrounds and origin, but one thing is in common is that you both have yourself personally and your companies respectively have a great interest into tech and the most disruptive business models and emerging technologies. I discussed NFT and sport-related engagement strategies with Patrick and blue chip art tokenization strategies with Nicholas all the time. So no doubt it's going to be a very interesting conversation about family offices investment, the most recent trend on the market, and fundamentally what it means for this particular type of investor to jump into those unstable and difficult to predict ecosystem, while being very much focused as well on preserving and transmitting those assets to the next generation. But first and foremost, let's start with the basics. Who are you guys? And a word about yourself. So maybe all Europe could start. Baron Nicolas, please.
Appreciate that. Let's make that short. Yes, I've been the first fully regulated alternative asset manager in Switzerland. Built a hedge fund operation of up to $15 billion, only institutional clients. So it's the top Asian sovereign funds, Middle East, Nordic, Dutch pension funds of the world, fully regulated in the US. So that was part of my career. Then I went into fintech, built a company between Switzerland and Asia, lived 4 years in Vietnam, built a tech hub there. So that's another exposure. And today at 1741, besides my asset management hat that I have as chief investment officer, doing crypto, small, medium enterprise lending, all kinds of niche premium. It's far and foremost for the group to structure assets of clients. So here is the family office connection, is take the family's assets, put it into a fund, structure it, fully regulated, with a lot of advantages around that. That's what the company does and does for European and even some Asian clients. So that's an interesting angle to it for this conversation.
Fantastic. Fantastic. Thank you very much for being with us. Patrick, a word about you.
Okay, first of all, thank you, GDA, for hosting, and thanks for inviting me, Jean-Luc. As a brief intro, I started from a Big Four accounting firm. I was involved in their M&A advisory business, advising private equity and some corporates on analyzing deals. And thereafter, I joined Credit Suisse, working on equity research. And after that, I realized I'm interested in venture capital investment more. And so I joined a startup to lead their finance function. I was hoping that the experience in the startup would be beneficial for a VC career. And thereafter, I got the opportunity to work for Soul Capital and also Soul Ventures. Soul Capital is a family office investing in early stage startups. Our founder's family operates a semiconductor distributor business and is currently the largest distributor for Samsung in China. The founder himself has been investing in technology companies for over 15 years. And in 2015, he started to establish Soul Capital with our very first investment in GoGoX, now one of the unicorns in Hong Kong. We also have another investment arm, which is Soul Ventures. It is a VC fund and mainly focuses on later stage tech companies. It was just set up in early 2021. And so far in this year, we have already invested in companies like Epic Games, SpaceX, and Reddit. That's the brief introduction for us.
Fantastic. That's absolutely great. And I have to say that for having been in Asia for a long time enough, and especially meeting with family offices all the time, I have to say that Soul Capital is, very well known in Hong Kong and abroad for being one of the most innovative investor around. All right. Family offices are usually seen as being conservative and extremely careful about their investments. But we see more and more capital flowing into tech and even in Bitcoin. Personally, I remember just maybe a year or two ago mentioning anything related to digital assets or Bitcoin or staking or anything like that would have been a complete no-no. You would have been out of the door before you even finish your sentence. And now we see much more interest into this. I would like to know, that's my first simple question. Is it the signal of the change of paradigm? And how do families manage exposure to innovative assets and high growth asset classes while preserving their wealth, their name, and their reputation? So basically, a family office is usually an entity that is set up with preservation in mind, transmission, protection, and that seems to be quite antithetic to taking risk. And tech investment is usually associated with taking risks. So how do you see this balance happening and being established between those two end of the spectrum, Nicholas?
Yeah, so my observation, obviously having more exposure to the really big family offices, the very large operations, big wealth, not somebody who has a couple of million. There is a clear distinction between old money and new money. New money has learned that they made their wealth by being concentrated, running concentrated risk, doing everything they can, and you make it or you don't. And if you made it, you know that anything that has to do with that, is high growth, but is also high risk. I think that's what they learned. They're still single generation, much in the building side of it, and they obviously like tech. They like disruptive stuff. They like all the new things around that's going to change the world. The old money is a bit different. They think multi-generation. They first will talk with you everything between tax and inflation and the legal side of things. Is America safe? Is France safe? Is Germany safe? Is Switzerland safe? What about Asia? What's the governance of assets? What can a government do to cheat on you, take your assets away, take control? All these things, before they even talk performance and the whole investment side. We feel it a lot as structuring assets here for them. Even things like, it's not even about tax optimization, it's just about discretion. They don't want a manager that they give money to know how many billions they have. They just don't want that. They just want to be behind the screen, be a bit remote, don't have publicity, just be behind. Discretion, and efficiency in operations. That's what they want. And they worry a lot about, the political side of things and structuring things for the long term. So that's, I would say, old money, new money. That's how I would look at it.
Okay, and how do you see old money coming now to those disruptive technologies? How do they have a specific approach in terms of? Okay, I mean, Patrick was mentioning Epic Games or SpaceX. Is that something that they would be naturally inclined to now to invest into, or would you say that someone like you would have to do a really high, a big effort of due diligence in order to convince them and bring them to the table?
It's very simple. It comes with the young generation. So if these guys have the young generation coming up at our age and younger, way younger than us, I think really in their 20s, early 30s, they will give them, just to train them, they will give them an allocation, and if they do well, they give them more.
Yeah.
That's what I'm seeing happening almost everywhere.
Yeah. Okay.
But they see it more as a training field than anything else. Of course, like a Bitcoin discussion is there. I mean, you see even the most successful hedge fund managers in the world that, like a Paul Jones, who have, basically saying Bitcoin is shit, you should never do, intrinsic value and blah, blah, blah. And now they all invest in it for a reason. And so there is a shift coming, thinking on how things are done worldwide, but it's coming slowly.
Okay. All right. Patrick, what would be your opinion about that? Working yourself for a family and being much younger, to use the Nicholas expression.
I think first of all, in the internet era, technology companies have already delivered great return. I mean, the return itself has already attracted a lot of not only family office but different institutional investors to enter into the space. That's first. Secondly, yes, obviously, I think the younger generation of rich families are more open to new technology. And when they take control, very likely the family office would increase allocation to innovative technology assets. For example, So Capital, our founder is basically the second generation of the family, and you can tell their attitude. My founder and my founder's older generation, the difference of them, the attitude towards new innovative assets. And that said, I think to balance out definitely comes with higher risk, with higher return. Many rich families are professional investors, and they definitely, balance their high risk technology investments with relatively lower risk traditional asset class. They still invest in a lot of real estate. They still invest in a lot of bonds. And the other thing is, I believe to a certain extent, investing in technology companies can actually improve the family's reputation. You can see a lot of PR these days for the family office to invest in some technology companies, because some technology companies actually generate positive externalities that is beneficial to the society. And you can see that many investors are actually proud of making such investments. And yeah, that's my opinion.
Do you have some examples? Are you thinking about things like ESG, environmental friendly investments, impact investments? Yeah.
Yes, those are definitely yes.
Okay, that's interesting. Okay, it's interesting. Patrick is obviously Asian. Nicholas is European. In terms of your respective visions of the world, Soul Capital. I can say that because we had a chance to collaborate on a few opportunities. You guys invest into many different tech-related assets in Asia, but you are also very much expanding, to the West, I would say, to speak broadly. Nicholas, on your side, personally and through the different firms you've been involved in, I know you do have a very strong interest for the East, Asia, Vietnam and Hong Kong and Malaysia, which is actually how we met. So it's interesting to see a Swiss guy looking at Asia and a Hong Kong family expanding to the western side of the world. Is that a kind of natural evolution for the business? Are there any specific reasons for that that you can discuss with us? Maybe Patrick, if you want to start.
I think I've mentioned So Capital was set up in 2015, and our connections are mainly in Asia and Hong Kong. We've been investing a lot in Southeast Asia and Hong Kong, actually Hong Kong mainly. Expanding into the West is actually opportunistic. We've set up So Ventures in early 2021, and we have a partner there in the US, and we have made some useful connections there. And therefore, it gives us some opportunity to expand into the US market. The US market has been attractive, but sometimes to us, it's opportunistic. It's no specific reason. We made a connection there, and we see good opportunity there. And speaking about Asia tech opportunities, we're still witnessing a very maturing of the tech ecosystem there. This year alone, I think we can see exits of Southeast Asia unicorns, like the SPAC merger of Grab, IPO of Bukalapak, and you can see Gojek and Tokopedia merger. You can definitely see the tech ecosystem is maturing there. I think these big tech giants do not only demonstrate the potential of Asia assets, but they are also helping to improve the tech ecosystem, including attracting foreign investors and also nurturing of younger startups. The growth, you can tell, in 2020, startups raised 8.2 billion in the region, is already almost 4 times what they did in 2015. And you can see the same trend in Hong Kong. Hong Kong this year, if you have followed the market, you see many big exits here. The soon IPO of Google X, the SPAC merger of Day Cook, and the SPAC merger of Prenetics. These are all showing the maturing of the markets here in Asia and Hong Kong. And we definitely continue our focus in the region.
Okay. Is it also a factor of diversification of risks between, rebalancing the portfolio between Asia exposure and the rest of the world?
Yes, actually. This year, for example, we've been investing in a few China deals, and you can see there are some political policy risk, I would say, this year, especially from the end of 2020. And I think this is a perfect moment for us to expand into the West as a diversification. It already delivers some diversification value to us already.
Okay, cool. Baron Nicolas, why are you so interested into Vietnam, Hong Kong, Malaysia, and the rest of Asia? Why not just focused on all Europe?
Maybe I don't make so much difference between regional thinking, because I think it's a wrong way to look at it. You invest in Germany today, you invest in Asia, right? So you get the returns from Asia because the growth is in Asia and these people are active in Asia. So you want to invest in Volkswagen or in Mercedes, where's the revenues? In Germany, right? So is all Asia already. So you have to make a clear distinction where the growth is, and then obviously where the talent is and where the basis of the firm is. All of that, is another story. So where you invest is not like you put $1 into Germany and you are in Germany. No, you're not. You put $1 into Switzerland and you are in Switzerland. You're not.
Globalization by nature.
Completely wrong way to look at it. So you have old school investors in Switzerland who tell me, can you get me exposure in Vietnam? The firms I see is fantastic. Look at the growth, even higher than in China. Just go there, buy all this stuff. Nobody is doing it. Buy it, do me value approach. And they just, you call them and they just put millions and millions and millions and millions into this market, right? I've seen a guy here in Switzerland who's just like, it's just crazy what he has in Vietnam. And he says, well, I don't care whether it's Vietnam or elsewhere. I just look at the value of these companies and I'm doing my homework. The man is almost 80 years old and is just doing what he's always done. And whether he finds that in Vietnam or in Switzerland or elsewhere, he doesn't care. The other side is safety of assets, is the structuring side of things. Is America going to be safe in the future? Is Switzerland going to be safe in the future? Is France going to be safe in the future? What is happening? Where do you want your assets governed and structured? How do you run that? That's another call, right? And here it's a whole different topic, but I think it's a very important one. If you look at it from a global perspective, capital can move around. And how do you do that is another story. And there you should diversify and you should very carefully think about what you're doing. But investing is really global. Where the growth is and where the talent is, just go full speed. That's what you have to do.
Okay. All right. Talking about that, if we focus now on the most recent trends that we have seen on the market and just, over the last couple of months only. NFT is crazy. Bitcoin mining is a super hot topic. DeFi, staking, tokenization of traditional assets, art, for example. What's your interest in those things, and how do you see the future here in terms of future of those technologies, future of those business models, which are very innovative? but also as asset classes for the families you represent, you, Baron Nicolas, and the one you work with, Patrick. Maybe Patrick, you want to take that one first?
Yeah, I mean, you just mentioned NFT, and NFT is definitely the hottest, the hottest investment here. We are actually quite active these few months. It's crazy these few months. We think Q2 is already a very hot quarter in NFT, but in Q3 it just jumps 8 times. The volume in NFT trading jumps 8 times in Q3. The growth is massive here, and of course we are one of the contributors to the massive growth. We're investing in different NFT projects and also NFT platform, and we think NFT is here to stay. I think we can see more trends in the NFT, like historical moment value unlocked. Some media try to issue NFT for the historical moments. You can see more institutions entering into the NFT market, basically endorsing the trend. And I think we will also see more traditional famous artists and photographers entering into the NFT place as well.
Okay, all right. What about DeFi protocols and services, and even blockchain technology?
Yeah, we are active in the other markets as well, DeFi as well. I think DeFi, you will have, DeFi starts from, in 2020, it started getting hot. And then I think DeFi trend, you will see they will include more traditional financial products into the DeFi space. More and more new DeFi companies will try to copy the traditional financial products model to the DeFi world. And you will also see the demand for cross-chain interoperability. That will also be, many people are working on that, and I think we'll see many cross-chain projects.
Yeah. I would also mention Web3. That is, I think it's going to be a massive wave. I mean, it's already extremely strong, but I believe the next 12 months we'll see a tremendous growth on this side as well. Baron, what do you have to say about that?
I can only echo that. What I'm most excited, obviously, about, but it's a bit more way to go, is how this censorship-proof world can really help to disrupt the finance institutions that we have today. Right? So DeFi is offering a great opportunity, but I always have the problem. Okay, now I need to make it work in a regulated framework. I need to make it work retail possible. I need to be able to do it within the legal framework that is there at the moment, with the power that these governments and institutions have. Right, you cannot go outside of it. Right? So you have to blend those two worlds, and there's a lot of very exciting stuff going on, and I think it's gonna change the world quite significantly. We've already seen that the banks, they become IT platforms. They are not risk takers anymore. So everything goes to shadow banking that has to do with risk taking. Then they work with completely old technology, which from a consumer perspective and a user perspective is a catastrophe. So all this will happen. We'll be able to trade non-bankable assets in the next 5 years, like you trade stocks and bonds. You won't have market makers on the other side that cheat on you, treat you badly, even in the Bitcoin world, the crypto world. I mean, what Binance does and all these centralized exchanges do, I mean, it's a complete rip-off. I mean, I make a lot of money of it, but, it's just unbelievable what they do. So this all has to go censorship-proof, decentralized, has to happen and will happen. Offers a great opportunity, but how do you structure all that? That's the really hot thing, where it's going to change people's life, right? Not on a small case, not for the speculator. It's really, how do you change people's life with these technologies?
Yeah,
I think that's really what I'm very hot on. And the other part, is a trader's game, and you make a quick buck and it's fine. and if you don't time it right, you will also lose a lot of that again. But if you get the utilization right, if you do something for the consumer, for the investor, that really changes their life, that will have a big future.
And yeah, that's a very important point. And actually, I believe this is something a lot of people who want to work with family offices fail to understand. That particular point that you just mentioned, how important the values are to those people, especially large single families. I am always impressed and very very impressed by that. The fact that look at impact investment, for example. It's actually connected to the very values of those families. They really, most of them, at least the ones that what I've met with and I'm in touch with all the time, they really want to do something to make the world a better place. So that's something that is I would say a constant. We only have a few minutes left, so I just want to thank you again for your participation to this panel, and I want to finish with one question. Give me one thing that does not exist today, and you will not be surprised if it exists in 5 years from now. Patrick.
All right. I think many people are talking about the metaverse today, and everybody knows if you really want metaverse to be realized, as the movie Ready Player One does, it actually takes a lot of different technology or enablers to make it happen.
Yep.
And one of the enablers, I think, is definitely the VR AR headset right now. So now we're talking about VR AR headset. And we're also talking about potentially in maybe 2-3 years, we will start to see the commercialization of AR VR glasses. But I think my vision is we'll see VR AR contact lenses to be really convenient for each one, looking normal, wearing the VR AR contact lenses, and you're actually looking at different virtual ads in the street with AR and VR technologies. I think, I'm sure some people are working on it, but I don't see the commercialization of it now, and I wouldn't be surprised if it happens 5 years time.
I'm not sure if what you just described is utopia or the most dystopian thing I can think about. Baron Nicolas, one thing that does not exist today, and you would not be surprised if it exists in 5 years from now.
I think it is the mass democratization of non-bankable assets. That's what I see, is that you have on your phone, you can trade your crypto and your equities and all that today already possible. I think tomorrow you will be able to buy a home, car, plane, fractional ownership of a piece of art, of NFT, of whatever, all on your phone within minutes, with a 3D visualization of your new home in London, where I swap this one for the other one. You basically enter the new place, you visualize it. It's all on your phone. You push a button and the transfer of ownership is done. That will be possible if the regulator lets it happen, if old school government lets that power go, which they may benefit from it. I mean, also the digitalization of currency, and they will know who interacts with who, and they will control you even more, and you will become more sheep than you have ever been, and democracy is gone forever. I mean, there are trends there that are very worrisome and that go in line with it. But, you know, if that happens, that's going to change. Yeah, I think technology is there already. It's just a question of whether the rest will follow to enable.
All right. Guys, thank you very much. I think, I mean, we could have, we could go for another hour or two, but unfortunately, we have to wrap it up now. Thank you so much for being part of this panel today. I think it was very interesting. I can only encourage our audience, whoever have more questions for any of us, to please do not hesitate to ask those questions on the chat. And thank you again, and see you very soon. Thank you. Tali, back to you.